Rates are finally starting to come down, and for millions of homeowners, that opens the door to one of the most powerful financial tools available, refinancing. But here's the big question. Does it actually make sense to refinance right now, or is it smarter to wait? In this video, I'm going to explain exactly what a refinance is, how it works, what the real pros and cons are, and what you need to watch out for before jumping in. Because while refinancing can save you thousands of dollars, it can also backfire if you don't know what you're doing. Hey everyone, my name is Asher Benjamin. I'm a loan officer with Nexa Mortgage, the largest brokerage in America, where I get to work with over 270 lenders to help people like you find the best possible mortgage options. And here's what I've seen. Homeowners who could be saving hundreds of dollars a month, but they don't refinance because they're confused, misinformed, or just straight up nervous about the process. On the flip side, I've also seen people jump into a refinance without really understanding the numbers and unfortunately end up worse off than before. So my goal here is simple, to give you the knowledge that you need to make a smart, confident decision that if refinancing is on the table for you or if it'd be better to hold off. Let's start with square one. What does it actually mean to refinance your home? Refinancing is basically replacing your current mortgage with a new one. You're paying off the old loan using the new loan, ideally under better terms. But why would you do that? Here's the most common reasons. To lower your interest rate and reduce your monthly payment. To change the loan terms. Maybe you want to move from a 30-year mortgage to a 15 to pay your house off faster. Maybe you want to switch loan programs like moving from FHA down to conventional to get rid of that PMI. Or to do a cash out refinance where you can pull some of your home equity out in the form of cash. Here's an example. If you owe $300,000 on your mortgage at a 7% rate and rates drop to let's say 5.5%, refinancing could save you hundreds of dollars every single month. Multiply that by 12 months a year and 30 years on a loan, and we're talking about tens of thousands of dollars in savings. So how does the process actually work? Well, it looks a lot like you getting the original mortgage. You apply with a lender like myself. We review your credit, income, and assets just like you did the first time to buy the house. Your home may need an appraisal depending on how much equity you have in your home to confirm its value is where it should be. The new loan does go through underwriting just like the first time, and once you're approved, your new lender pays off the old loan and your new mortgage begins. Now, one thing that people don't always realize is when you refinance, you're starting a brand new loan. That means if you had 25 years left on your current mortgage and you decide to refinance into a new 30-year loan, the clock resets. Sometimes that's fine, it lowers your overall payment, but you want to make sure you understand how it affects your long-term payoff. And one common thing I see is loan officers telling clients that, hey, just because you had 27 years left in your mortgage, your only options are 25 or 30 years. That's not true. Work with someone like myself who can get you a new 27, 26, 24-year loan wherever your term was at before you started refinancing. So why is refinancing such a hot topic in 2025? Well, because we're in a falling rate environment. Think back to 2020 and 2021 when rates dropped to historic lows. Refinances surged. People who were sitting at 4 or 5% interest rates suddenly had a chance to lock in a mortgage under 3%. Now, while we may not see those exact lows again, every drop in rates creates opportunities for homeowners. The key message is this: you don't need to time the absolute bottom of the rates. If you can save money today, take it. And if rates drop further, you can refinance again later. Waiting for the perfect rate often costs people more than it saves. Let's revisit some of the benefits of a refinance. First off is you have a lower monthly payment more often than not. That's the number one reason people choose to refinance. It creates some breathing room in your already tight budget. The second thing is that it reduces your total interest over time. Even shaving 1% off your rate can save tens of thousands of dollars over the life of the loan. Maybe you want to change loan programs. You may have started with FHA because of the buyer-friendly terms and are stuck paying private mortgage insurance. Refinancing that into a conventional loan could remove that extra cost. Another benefit is you could tap into your equity for home improvements, paying off high-interest debt, or just investing with a cash-out refinance, or you may need to do some debt consolidation. For people juggling credit cards or personal loans at 20% or 30% interest rate, rolling that into a 6% mortgage makes a huge difference. But refinancing isn't always sunshine and savings. Here are the downsides to be aware of. Closing costs. Just like when you bought your home, there are costs involved. The cost could be anywhere between 2 and 5% of your loan balance. You're also potentially going to extend your term. We've mentioned this before, but resetting your loan to a new 30 years means you're paying more interest overall, even if the monthly payment is lower. You have that cash out temptation. It's easy to over leverage your home and pull out too much equity, which could potentially put you at risk later. And then you've got to consider the break-even point, and this is critical. How long will it take for your savings to outweigh the upfront costs? If your refinance saves you $200 a month, but it costs $5,000 in fees, you need to stay in the home long enough to actually come out ahead. And this is where many homeowners get tripped up. Refinancing can be amazing, but only if the math actually works. So who's refinancing really for? Now, this is just to give you an overall feel. Homeowners with at least 1% higher interest rate than today's market, borrowers that are stuck with PMI or private mortgage insurance that they can actually remove, families who may need a lower payment or debt consolidation to create some financial breathing room, or people who plan to stay on their home long enough to hit that break-even point. If that's you, refinancing could be a smart move. So here's how to start the process the smart way. Check your current loan, know what your balance is, your rate, and your payment. Talk to a lender you trust, like myself. Explore options. There's fixed options, adjustable, conventional, FHA, VA, and so much more that we should be able to find one that fits you best. Run the break-even calculation. Don't just look at the monthly savings. Compare it to the cost of refinancing, and then finally decide on your long-term plan. Is this just about lowering payments? Are you trying to pay it off faster? Trying to pull out cash? The strategy you decide to go with matters. And then the burning question, should you refinance in 2025? The truth is, it 100% depends on your numbers. For some homeowners, refinancing will unlock huge savings. For others, it might not make sense. If you're curious about what refinancing can do for you, please reach out to me. I'll run the numbers, show you the break-even point, and help you decide if now is the right time or if you should wait. The key is, don't guess. Know your options, know your math, and make the decisions that's best for your future. Thanks for watching. If you found this helpful, make sure you hit like, subscribe, and check out my other videos while you're at it, where I break down the smartest strategies to navigate today's housing market. Thanks for tuning in. I'll see you in the next one.